There are lots of topics in A-level accounting that require you to be able to successfully record double entry. Double entry is straightforward once you know the rules and the method, and that's what I'll be explaining in this video. Double entry uses T accounts to record the entries. T accounts are a way of visually presenting all of the entries that have been recorded for a particular item of expense, income, asset, liability, or capital. They're called T accounts because of their shape, a capital T. The account name is recorded at the top of the account. Debit entries are recorded on the left-hand side, and credit entries are recorded on the right-hand side. These are the rules of double entry bookkeeping. It's fundamentally important that you learn these in order to be able to use them. I call these the 5 categories of accounts. Increases in expenses and assets are shown on the debit side, and increases in income, liabilities, and capital are shown on the credit side. Every account that a business has belongs to one of these 5 categories. For example, sales revenue is income, electricity is an expense, and a bank loan is a liability. If you know which category the account you want to post to belongs to, you can use these rules in order to determine whether to post a debit or a credit. But how do you know which of the categories your account belongs to? Let's look at the 5 categories in a bit more detail to understand them. Assets are things that the business owns. There are 2 categories of assets. Non-current assets are things that the business owns that will be used by the business to help them to make a profit. They're not intended for resale, and they are intended to be in use for more than a year. Examples are land and buildings, vehicles, and machinery used in a factory. Current assets are short-term assets that the business will keep for less than a year that are easily convertible into cash. Examples are cash itself, money in the bank account, inventory, and trade receivables. A trade receivable is an amount of money owed to the business by a customer. Liabilities are amounts that the business owes to a bank or other organisation or person. There are 2 categories of liabilities. Non-current liabilities are amounts that the business owes where the repayment date is more than a year in the future, for example, mortgages and long-term bank loans. Current liabilities are amounts that the business owes that must be repaid within a year, for example, trade payables, which are amounts owed to suppliers, short-term bank loans, and overdrafts. Capital refers to the amount of money invested in the business by the owner. When the owner takes money out of the business for their own personal use, this is called drawings. Drawings reduces the amount of capital in the business. Note that this terminology I've referred to refers to sole trader businesses only. Limited companies use different terminology. That's covered in a separate video which you can find if you subscribe on my website www.studytheeasyway.com, where there are a full range of A-level accounting resources. Expenses are the costs of running the business on a day-to-day basis. Included are costs such as telephone bills, decorating the office, stationery, water bills, insurance, and advertising. There are many other examples of expenses as well. Income is the amount the business earns from selling goods or services, that's called sales revenue, or by another means such as renting out part of their property. The main example of income is sales revenue, which is calculated as the quantity of goods or services sold multiplied by the selling price. I hope you're enjoying this video. Visit our website to learn more about the A-level accounting resources that we offer and how to subscribe. Let's go back now to the rules of double entry, which we talked about earlier in the video. Increases in each of the 5 categories are shown in the diagram here. Decreases are shown in the diagram at the bottom of the page. Notice that they have switched sides. So, for example, increasing an asset is posted as a debit, but decreasing the value of an asset is shown as a credit. An example of this is paying money out of the bank account. The bank, which is an asset, is decreasing in value when money is paid out, and therefore to record the payment of money out of a bank account, you would post a credit, as I've shown in the T account here. Let's have a look at liabilities. Increasing the value of a liability is shown on the credit side of an account, but decreasing a liability is posted as a debit. For example, repaying a bank loan. The value of the amount owed, which is the liability, the amount owed, is decreasing. Therefore, to record the repayment of the loan, you would post a debit to the loan account, decreasing the loan liability. In double entry bookkeeping, every transaction has 2 parts. That's why it's given the name double entry bookkeeping. One of the key skills in posting a transaction successfully is to identify the 2 accounts that are affected by the transaction. So let's focus on that. Here's an example. A customer pays £20 for goods using a £20 note. This transaction has 2 aspects. Firstly, the business has sold goods, so sales revenue increases. And the other aspect is that the business has received a £20 note, so cash increases. This leads us on then to the rules for how we can follow a method for recording double entry. Firstly, read the description of the transaction. I've used the same one here as on the previous slide. Secondly, identify the 2 accounts that will be updated. As we've just discussed here, the first one is sales revenue and the other is cash. Step 3 is to take each account in turn and using the rules work out whether to post a debit or credit. In the sales revenue account, the first thing to do is to identify that sales revenue is an income category account. The rules tell us that recording income is shown on the credit side, so therefore we post a credit to the sales revenue account, as I've shown here. The other account is the cash account. Cash is an example of an asset category account. Money is being received, the £20 note, and so the cash asset is increasing in value. The rules tell us that recording an increase in an asset is shown on the debit side, so we post a debit. If you subscribe to our website, you'll find that there are a whole range of different videos that cover different aspects of double entry. For example, double entry for credit, sales and purchases, returns, and cash discount. There are also worksheets which you can print out and practice, and a multiple choice quizzes included in this section for you to check your knowledge of double entry bookkeeping. I hope this video has been useful to you and has helped you to understand double entry bookkeeping. Visit www.studytheeasyway.com to learn more about the A-level accounting resources we offer and how to subscribe.